Hey guys, Big Chonis here. Thanks for joining me. This is Monday, 11/27, 2023. Let's talk about some interesting crypto setups and chart analysis. This video is sponsored by BingX. You guys can see my affiliate link in the information below. If you're looking for a place to trade, BingX is a place to do it. BingX.com. Looking at what we see here, I wanted to start with our market cap dominance. And this is kind of that cheat sheet that tells you what's kind of happening with alts relative to Bitcoin price action. And as you can see, what we've been seeing is ever since mid-November, we've been seeing the steady drift up in Bitcoin dominance. And along with that, we've been seeing kind of a moderate decline in a lot of these altcoins that have had massive moves over the past several weeks. This is quite telling because, for instance, a lot of those coins had big, hundreds of percentages moves almost. And that was basically shown by what happened here when Bitcoin dominance topped off at around 54%, all the way down to 51%. That in itself was kind of alt season here. And now over the past 2 weeks, we can see that Bitcoin dominance slowly creeping up. So what this is basically telling me is that a lot of that money flow that flew into alts over the past few weeks has basically been consolidating, and some of it's still kind of flowing into Bitcoin overall. But the more important thing as we zoom out to the broader part of the chart is this is a very bullish looking chart here. We can see we basically had a long area of consolidation from the 47% all the way to the 39% range from May 21st all the way to 2021 all the way to September 2022, and then we basically seen our advance here as Bitcoin has been a much stronger crypto asset over this move here. And this little red blip here, that was kind of that mini alt season that we just had there, with a lot of coins able to break out of their range and put some really nice percentage moves in. Now that's kind of stalled out, as well as Bitcoin dominance, and we can see an area back here where Bitcoin basically chopped around a lot in that dominance before breaking up north here. So we have running room from a dominance standpoint to get higher. Now what does a rising Bitcoin dominance really truly mean? It means a couple things. It means that Bitcoin from a strength perspective is holding up better than altcoins. Remember, Bitcoin dominance can rise while Bitcoin and other altcoins fall, just Bitcoin falls at a slower rate. And that's something that you kind of see, still in kind of that bear market circumstance where you want to see the altcoin market strong. That basically means that we're seeing rotation. Bitcoin rises, Bitcoin consolidates, altcoins rise while Bitcoin is able to stay, relatively strong and not very volatile. And basically that rising tide rises all boats. So as Bitcoin is kind of dominance here, hovering over, let's just call it 50%, that's going to continue, in my opinion, to basically hold that Bitcoin is going to be a stronger asset and take more of the crypto money, as well as hold up better than other altcoins if we have a more sustained pullback. So let's bring up the Bitcoin chart here and see what we are actually looking at. Now, we've been watching this kind of, running bull flag, if you will, ever since we were able to bust up through here, through the, 30K range, this kind of slow stair step higher where any of these dips keep getting bought. And more importantly, a lot of market participants that basically were waiting to kind of catch a dip really haven't been given that opportunity to do so. Now, what we've seen over the past year is we've had this big advance here followed by a pullback, big advance followed by a pullback, big advance followed by a pullback, big advance. But where's our pullback? It's not happening, at least as of yet. What this chop has basically created is what I described earlier. When Bitcoin is able to range and hold its gains, we're seeing some of that money affect into the altcoins as people became a little more comfortable, putting those long trades into the altcoins, because Bitcoin, unlike the previous times here where there'd be these big pullbacks after the pump, is not doing that. Now I'm going to pull up some oscillators, some indicators here. I'll go back to our daily chart here, and let's take a look at our Bollinger Bands to start off with. Now our Bollinger Bands, we've been tighter before. Tightness basically shows consolidation before expansion. Doesn't necessarily mean it's a bullish or a bearish expansion, just expansion all around. And the tighter the bands get, the more potential and the more chance for an actual bigger move to actually take place. We zoom in here on our daily, and you can see again upper Bollinger resistance has been holding, lower Bollinger Band is racing up to kind of catch up with our price action, and the middle BB, which is the simple moving average of 20 periods, held yesterday's candle price action support and is currently holding this new candle as we open up today right at $37,000. Now we go into higher time frames and we can see that this advance was so big here that it really spread out our Bollinger Band. So only now after these weeks we're actually beginning to tighten up on these higher time frames. 2-day, now we're in the 3-day. 3-day still very wide. Now we're in the weekly. Weekly still very wide here and almost just beginning. We're just really even seeing the lower Bollinger Band beginning to actually to curl upward, which is what we want to see from a bullish move here, and we're just plenty of time for that to actually take place. And lastly, I just want to show the monthly. This is kind of a fun one here because what we're looking at is upper Bollinger Band resistance, touched right there because of this weekly closing candle on the monthly. Or as we get closer to it, it's coming down lower and lower and lower there. So we're able to touch and so far reject ever so slightly on our upper Bollinger Band, the monthly, while keeping that middle Bollinger Band in line. Let's go back to our daily here, take a look at some few things. So EMA 12 and 26, these are my two go-to EMAs. And just from a standpoint about, being comfortable to be in a trade here, all you have to do is kind of watch how these kind of dance along with them. And once we're able to confirm the bull cross here and then see that bull cross hold, we've been in that kind of straight perfect 12/26 move over the past several weeks. And as we zoom out, we can see it gets a little more clear and a little more clear. As soon as that bull cross was initiated, that was the go signal there. Notice on the weekly here that bull cross actually happened back in February. So this would have kept you in any kind of a bullish trade on the weekly because these never crossed. Even though the price action, right, was below them numerous times, we weren't able to get that bear cross. And as well, what's more notable, I think, is on the monthly time frame, we had our bull run here. Here was our bear cross. And now look at that. On our monthly time frame, we are finally able to confirm this bull cross here. What's so notable, I think, on the monthly time frame in terms of the EMA 12 and 26 is that these have, almost for the most time, always been in a bull cross. And just right here in August and September of 2015, did we actually have this first and only bearish cross. And ever since then, these two indicators have been in a bullish pattern. Even with the major pullback of 2018, you can see that they actually never crossed bearishly. And then the bull market of 2019 and 2020, and then once again, the spread, how far above the 12 to the 26 was so apparent. So there's our bear cross, and now we are into our bull cross here. Now that's very notable, okay? Because as long as this bull cross holds, now we're up to the monthly, the weekly, all these are still holding bull crosses. The bulls still have control basically unless proven otherwise. And lastly here, I want to pull up our three EMA moving averages, 50, 100, and 200. Brown is 50, 100 is the blue, and the red is 200 there. And again, as you can see on the daily chart, this is the exact sequence or fanning out we want to see these three in the proper order. As we zoom out to higher time frames, 50 over 100 over 200, it isn't until you get to the 3-day 50 over 100 or 200, right, weekly, not yet. So we have our 50 racing up here, but we still have it below our 100, and we have both our 50 and a 100 currently below our 200. Notice our 200 moving average 200 period moving averages basically be on the weekly, has been in this uptrend, for years. It's never not had a down angle. We see the 100 kind of was basically the same until here, and the 50s had little ups and downs all the way through, but we've never actually really seen the 200 right in this kind of down angle. And that's because Bitcoin's always been its overall high or low pattern, even though we've had these major washouts and stuff. And what's important, I think, is just seeing the confluence, right? The confluence of these moving averages together here, right between 28K to 30,000. This will act as continued strong support, not just if Bitcoin ever comes down here to reach these, but as Bitcoin continues to move in the future, these are now acting as support, which previously they were acting as resistance. See, the 50 here was acting as resistance, the 100 here was acting as resistance, and now price action remains for several weeks over all three of those indicators here. Same with our higher time frame monthly candles. We can basically see that the MA50 is now basically being used as support. And once again, until that fails to hold support, which is rising around 28, 29K, the bulls on that higher time frame do have control. Now, I want to bring up Ichimoku. These are abridged, or I guess changed from the default to 2061, 2030. I've always used those in terms of a crypto standpoint. You can see once we were able to enter our red Ichimoku cloud here and being used as support, there was just open running room to run up here. Now note, our upper Ichimoku cloud resistance is up here at around $42,000. So the cloud is telling us that Bitcoin has running room up until around 42K before it would basically hit that major area resistance. Doesn't necessarily mean it can't come back down here first, which is, support, major support, been tested several times, but this is currently what the cloud is telling us. We can kind of see on previous times where Bitcoin has been able to advance into the cloud, break through it, come back in it, use it as support, resistance, lose it as support, get back in it, lose it, break through, use it as support, and then basically break out of there. So we have this, historically, we've seen that we can have several false breakouts and several false breakdowns, but overall, once price action is able to accelerate through that cloud, the price movement can be significant only when it's able to do so, and we're not even close to basically being able to test that yet. I want to check in some of our indicators and oscillators here. We still see a very positive chalk and money flow, even though we've kind of lost a lot of our momentum over the past week here. We're about 10 days from our highs that we had put in there on the daily. As we zoom out, we can see we're on the positive on the 3-day there, positive on the weekly, and still negative, though, on the monthly. These three moves here represent basically the bulk of our bull markets. And these three negative moves here represent the bulk time of our bear market. So even though we've had such a great advance in Bitcoin price action over the past, year, let's say, right, we're up over 100%. The money flow on the monthly time frame coming into the market is still showing that we haven't even really begun to advance into anything we've seen in the previous bull market cycle. So does this say that, it's still very early? It can. Does this also say that we really haven't done anything in terms of really bringing in that true bull market cycle yet? It also can. And a lot of that has to do with basically when we get closer to the halving, which is still about 6 months away, we tend to see one more kind of shakeout dump of Bitcoin, where then it begins to accelerate into its parabolic advance as we get past the halving. And we still have many, many months for that to come. MACD still losing our momentum here and has been doing so for several days. And we can see we've been negative on the histogram as well. So we're losing that momentum here. Daily RSI, again, anything over 50 is still pretty positive here, but as you can see, our RSI continues to fall. Now remember, we have a falling RSI here, right? We were at 86, 84, Now we're kind of in the mid to high 50s here, while our price action is still basically overall holding. Now this could be argued as bullish divergence here, where the RSI is being allowed to kind of reset while the price action still remains at the highs where the RSI was significantly higher. So does this give RSI now running room, that if Bitcoin is able to establish a new price action of support, be able to use this as kind of that turning point, and now it has running room to get into the 40K range without the RSI getting too heated and overextended. And lastly here are our stochastic RSI, which is just kind of putzing around here, but as you can see, putting in those lower highs. Now we kind of zoom out on this and we can see again the weakening. Weekly's been topped off for a while. We're just starting to kind of roll over there, and our monthly actually still has some upward room to go, but kind of stalling out as well. So we're seeing a lot of mixed bags here, where we have our price action pretty much where it's been for several weeks within this kind of tight trading range, and it's allowed a lot of our oscillators and indicators that were initially very overextended to kind of chill out and to kind of slow down there. We're getting close to the end of the year, and not only does the end of the year bring the yearly charts, it also brings the monthly chart, also brings the quarterly charts. So just a quick look here at our quarterly chart here with Bitcoin, and kind of interesting what we're basically seeing here. If you look at this confluence of candles here, what you can see is it really is this area here, about $44,000 to $45,000, where we spent from a quarterly standpoint a lot of time. It was very tight candle, another tight closing handle here, and then there was the fall. So if this was major support, here was our bear break, and we can see our price action drifting higher. So this gives, again, another idea to the fact and the possibility that Bitcoin can still go higher into the mid to low 40s before it actually does hit some more meaningful resistance, as we try and retrace our entire quarterly candle here of Q1 of 2022. Kind of zoom back to our weekly chart here, and I want to talk about some Fibonacci's that I've been watching here. So let's just start with the basic one here, where we have our all-time high, and there's where we came down all the way from our lows. Now, when you think about a bear market, you think about a bear flag, right? What comes to mind basically is you can advance up to about the 382, and you can kind of still keep that bear flag in mind. What do I mean by that? Basically, where you have, here's our flag pole, here's our flag, and we can see that we're drifting up here. And I would argue we're still basically in the range of the 382, which means from a bearish standpoint, this can totally still be a bear flag. We have an incredibly long flag pole from almost 70 grand down to about $15,000, and our slow grind up higher here. Now, in theory, we could get almost to our 50% range here at 42K, and still pretty much, but doubtfully beginning to lose the possibility that this is just a giant bear flag. And what I mean by that is this will basically break and continue that downward momentum down here. Now, we have history that shows us what happens after our bear markets, and this is our 2017 high, our 2018 low, and we were able to come all the way back to that 61 to 65 area, that golden pocket right at 13K. So if Bitcoin does what it did in 2019 with a 61% retracement, then we could actually see Bitcoin price levels up here to about 45 to 50,000, $48,000 to $50,000 right now. Clearly that would negate that kind of bear flag look to it, but it wouldn't necessarily be out of line for what we had seen previously. And wouldn't it be very, I guess, cruel for the market to continue to kind of drift up here, not really allow people, the longs, to enter in, top off again what it did previously back here. And then what we remember, the COVID crash basically brought us all the way back down from 14K, all the way back down to those wicks, let's just say under 5K. So if history was going to repeat itself based on, the 2019 echo bubble, this is that area of achievable price history. But we still have, a ways to go there. Now, I've talked a lot about on Twitter, basically about why we keep kind of hitting our head here and not being able to advance kind of in this area here. And we spent significant amount of time, in this area for weeks, trying to, months even, trying to hold this as support. Major bounces, 34K to 45K, 35K to 45K, 38K to 48K, big bounces there. And then finally that support area was lost. So we're still on the underside of this area that was acting as major support back in early 2022, only to basically lose that area as support and come all the way down. I do want to touch base quickly on one more chart, and that is the Bitcoin CME futures chart. And before we do this, guys, if you enjoy my content, please hit a follow. Please hit that like button. Remember to follow me on Twitter as well, at Big Chonis. And if you're looking for a place to trade, BingX is sponsoring this video, and you can find my affiliate link in the data below. I'm a big fan of the gaps of this CME. It tells me areas that are achievable and stuff. And on this leg up here, we've established, several gaps. Now, what was different about this week's opening candle gap, and we had one right there, I can zoom into it there, is that unlike the previous ones where we had, here was our close, here was the gap up, here was our close, here was the gap up, here was our close, here was the gap up, this was the gap, it got filled right there, see, here was our close, here was the gap up, here was our close, here was the gap down. That's different. So the first time in a while here when we see the gap after the weekend is actually a gap down and not a gap up. So now we actually have, for the first time in a while, a gap above current price action. That is notable. Now, I believe that all these gaps, all three of these, will get filled at some time. I'm not sure which order. This one at 34 might get filled before 38 does. 38 might get filled before 34 does, yada, yada, yada. And yes, I do believe there are other gaps potentially lower, but we'll save those for a different show. The reason I feel that the 4-hour on the CME is such a powerful chart, it kind of all has to do with how I originally got into this many years ago. And notice that there was a little gap here. Let me zoom in right here. Boom, right here, this little guy right here, January of 2018. And there was a gap here at around 13.8, 13.9. And this was like, oh, there's no way this gap will ever get filled for a very long time. We had this other one here basically at 11K in February. And sure enough, Bitcoin got all the way down here, created all these little gaps. And then the rise came. And where did we end up topping off in our 2019 bull run market EPO? Literally right up here to fill this gap. Unbelievable. So all these gaps that were opened all the way down, they all got filled as the price action came all the way up. Now, we have open ones much lower than a current price action, but only the ones that we see right here are the ones I'm most focused on because these are the most current and near term to the price action. So this tells me that we have the ability to get higher and fill this one here, but we also will eventually at some point fill these on the way down. Just a question of when, not necessarily if. So as we kind of get close to the end of November, and this is still a good looking candle, man. I mean, it's hard to kind of say, oh, it's bearish and blah blah blah. We don't really have much of an upper wick here. Nice and green. This will be our third green month in a row. We think about where people are positioning themselves for 2024, and a lot of it is basically kind of be played out in the next several weeks. I think we're actually going to see some major volatility happen, and in the guise of that, my overall idea about what we're seeing in the market is that's the fact that until the NASDAQ, which has been bullish AF, breaks down, fails to continue to put in these parabolic moves here, then Bitcoin can still basically be a strong bullish asset. Bitcoin has only existed within a NASDAQ bull market, right where are we here? Somewhere around here, is where try that again, is where Bitcoin kind of the first block was mine right here. And look at what the NASDAQ has done ever since the iteration of Bitcoin. I mean, just an incredible parabolic move, okay, with dips and what have you in between, corresponding lightly with Bitcoin bear markets. And this was our 2022 pullback, very much what happened in Bitcoin in 2022. And then 2023 has basically been straight up for NASDAQ and straight up for Bitcoin. So the correlation is apparent and cannot be ignored. And until we actually see some major bearishness in the overall NASDAQ, Bitcoin can still ride those coattails heading into the future there. So it's Big Chonis. I hope you enjoyed this little talk I have this evening. There'll be a lot more of these in the near future. Please like and subscribe, and we'll talk to you soon. Peace.